Hello traders, Gary Wagner here just after 12 noon in Honolulu, 5 o'clock in New York. It is Wednesday, February 26th, 2020, and this is the daily report for gold and silver. Extreme volatility continued to rage throughout the financial markets, both globally as well as here in the United States. The Dow, for instance, overseas was down about 600 points pre-opening in the futures. It then moved into New York. It actually opened and then went up a couple of hundred points, up almost with a 400-point swing before closing about 122 points lower. We saw the same thing happen in gold. Gold was trading fractionally higher throughout the day. In fact, spot gold was trading at a premium at one point, and then we had gold sell off as we went into the close. It did close down on the day, and spot gold has just come off of those highs where it was trading higher on the day. We'll talk about that when we pull up our price board. In terms of technical studies today, we'll continue to focus on support levels because I think that there's going to be a huge opportunity upcoming to reposition ourselves on the long side in gold. First, to the price board. What really dominated market activity today was the extreme volatility that continues to persist in the financial markets. This is due to an overload of information and changing headlines in regards to the coronavirus as it continues to spread globally. Some are saying that we are on the cusp of calling it a pandemic rather than an epidemic. And the simple truth of the matter is, until there is a vaccine, we will continue to see, most likely, this virus spread. Now, the Dow Jones Industrial Average actually was down about 600 points in futures trading overnight, moved into New York, actually went into positive territory. As you can see, it closed 123 points lower. But what is significant to me are two things. The first thing is that it opened and closed below the 200-day moving average. That is what I've just circled in red right here, this red line representing the 200-day moving average. And the second thing is that the Dow has lost roughly 2,000 points this week alone. I think because we are still trading under the 200-day moving average, we could certainly see more downside in this market. And oddly, we're not seeing that kind of reaction in terms of a negative correlation in safe haven asset classes. We are in bonds, but not in gold, because gold traded lower on the day. First, we'll take a look at futures, this being the April contract, 1642.90, down $7.10 on the day. But what was interesting and perplexing throughout the day is the spot market was up about $5 or $6, and we had the futures market's down about $6 or $8. They've kind of come back into alignment now as we have hit the close, 1639.40. That is current spot pricing. Silver continues to drive hardly to the downside, 1787, a 32-cent decline on the day. Platinum down almost 2% also, 914.60. And lastly, palladium chugging along, up $60 at 2707.40. Let's take a look at our current technical studies. First chart that I do want to look at today is a daily candlestick chart of the continuous contract of futures, this representing the April contract month. A couple of things are fairly significant when we look at the last couple of days in terms of actions. The first thing is take a look at these lows that came in. We're definitively seeing the potential for some sort of a double bottom. You can see these lows are coming in pretty equally, and what is interesting to me is it is occurring just above this most recent high. This is that top that came in at 613, and we are definitely continuing to trade above 1631.70, and that is the extension that we talked about yesterday of the last rally. So that could provide a critical piece of insight in terms of potentially finding support. I most certainly think that we're going to see it hold $1,600 at this point. That doesn't seem to be the issue. It's whether or not we have weathered the sell-off that came concurrently with the sell-off in U.S. equities, because typically they move in an inverse manner. In other words, if you have risk on assets trading lower, that's usually beneficial towards the safe haven asset group. We're certainly seeing that in bonds. We are not seeing that in gold, though. Gold is continuing to fall down about $7 today. Now, it did close higher than the open. That's why we're looking at a green candle, but nonetheless, it is below yesterday's close, which is the bottom of this red candle. So the key is whether or not this market will hold these lows here that have come in recently just above 1620. Because if they do, I think that we'll see another challenge for that really critical brass ring, and that brass ring comes in at about $1,700 per ounce. I think that depending on how the coronavirus unfolds over the next, say, month to 45 days will really determine if we're going to see gold take another stab at that price point, because effectively, when they are able to create a vaccine, and it's not if but when, we will see that reaction calm and stabilize the global financial markets. We'll see huge upticks in economic growth compared to the downticks that we're seeing, and that could certainly put some pressure on gold. However, if it takes a while for the vaccine, and we have now talked about the Fed cutting rates again, that's going to be extremely bullish for gold. So I think there is definitely the opportunity. We will have to see how that unfolds over, as I said, the next 30 to 45 days. Traders, I do want to take a look at silver today. Silver getting absolutely hammered over the last couple of days. That's after challenging the $1,900 per ounce mark that we saw occur a couple of days ago. That, of course, came in tandem when we saw gold make a stab at the 1700s. Now, when we look at it now, you can see that we closed just above the 50-day moving average. We had a low that came in above the 50% retracement level. That comes in right here. That's his dashed line. If we can see silver hold this particular low, call it 1770, we could see it range bound in between 1770 and 1850, call it. We have definitive resistance between 1850 and 1863, no doubt, and then this top that comes in close to 1900. I think that what we're experiencing with silver is, as U.S. equities fall under pressure, that industrial component is weighing more aggressively on silver than it is on gold, and therefore we're seeing a larger percentage drawdown in terms of the kinds of gains or losses we witnessed in a day. But the same cannot be said for palladium. Let's take a look at that chart. Palladium is absolutely back on the upswing, 2707.40. That is the highest daily close that we have on record in this market. After trading past these highs, we didn't get any kind of closes until yesterday and today's price action. Now, what's the difference? The difference is supply. The supply is limited and the supply is less than the demand. So even if the market contracts a bit in terms of need, they are still unable to fill all of the orders necessary in terms of palladium. So we're seeing palladium being supportive even in a contracting financial market, and silver doing the exact opposite. My recommendation in terms of gold is to maintain our current neutral stance. Accumulators, physical gold, you can continue to accumulate at this level. When you're looking in terms of the trading of gold, my recommendation is to remain flat. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.